CPI inflation for June in the U.S. comes in at 3% on a year-over-year basis, lower than expectations of a 3.1% rise. Stocks rally on Wall Street. Both the Nasdaq and S&P 500 close at their highest level since April of 2022. Stocks in the Asia-Pacific surge on a cooler-than-expected inflation print in the U.S. The GIFT Nifty also indicates a higher start for the Indian market. And inflation accelerates once again. India's CPI inflation in June comes in higher than estimates at 4.81% as food prices surge. Industrial output, meanwhile, grows 5.2% for the month of May. And TCS reports first quarter earnings largely in line with expectations of a muted showing as constant currency revenue growth slows to single digits after 9 quarters. Peer HCL Tech disappoints as revenue declines over 1% and margin shrinks by over 100 basis points. The company, however, maintains its growth guidance for FY24 at 6 to 8%. And in key earnings to track today, Wipro is expected to post the weakest growth among large-cap IT peers. Also, watch out for numbers from Federal Bank. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra. Those are the top headlines that we have this morning. So there's losses come through on the macro front, both globally as well as in our own markets. And of course, the earnings season has kick-started with 2 tech majors posting their results. So we have lots to cover over the next half an hour. But let's kickstart with the global market action. We got that, CPI number from the US, which led to a positive handover coming through. And you have all of the Asian markets, which are up and about in trade. So take a look at how they're faring. You have Seng, which is seeing the biggest gain this morning. So that is up over 300 points right now, 340 points over there. Seng index doing very well. The Taiwanese markets also 1.5% in the green. So there is, a good screen across the Asian markets. The Kospi is up over 1%. You have the Nikkei markets, which are 1.2% in the green. And whichever Asian market you look at, it's definitely opened quite positive. The GIFT Nifty will also come up for you, and it is indicating that the start for our own markets will also be well in the green. So we're 100 points higher as far as what the open could really look like for our own markets. So that's what's happening across the Asian markets. But let's start off by talking about the big macro cue that really came through from the US, which is that CPI inflation, this is for the month of June, rose 0.2% if you look at it on a month-over-month basis, and 3% from a year ago. And this is the lowest level that we've seen since March of 2021. If you look at the core inflation, which excludes food and energy, that also rose less than expected. So we have Rick Santelli now with us to bring us all of the highlights of the inflation numbers.
Well, it was a big day with big data. Our June release of the Consumer Price Index, known as CPI, and all the metrics were better and lower than anticipated. We had 0.2 on both headline and core month over month. On the core, up 0.2 month over month. That is the lowest level going all the way back to February of 2021. And if we look at the 3% year-over-year headline number, that's down 67% from its high watermark, which was 9.1% in June of 22. So 12 consecutive months of lower headline year-over-year inflation, now down 67% from its high watermark. The fly in the ointment is core, year-over-year core. Now, granted, 4.8% came out. 8 out of 9 months or lower. It did have 1 month where it popped up, and that was in March of 23. It moved from 5.5 in the previous month to 5.6, but 8 out of 9 months have been lower. This would make it, of course, 9 out of 10 months being lower, and it's very significant that it's still very close to 5% because it's down much less than year-over-year headline. That was down 67%. This is down 27%.
All right, Rick, thanks a lot for getting us all of the highlights of the inflation numbers. But with that, let's also listen in to some important reactions that came through on the CPI print. This comes in from JP Morgan's Michael Ferroli, as well as Morgan Stanley's Ellen Zentner. Listen in.
Obviously, the core number came in a low side 0.2, and I think when you look in some of the details there, it was a pretty broad-based slowing. So when you look at measures that strip out some of the more volatile components, those also were near 2-year lows, let's say. So overall, it wasn't dominated by one single factor like used vehicles or some kind of quirky factor like that. So I think that's probably something that is giving encouragement to people as they look at the inflation outlook. Bear in mind, of course, it's one report, but it definitely is a move in the right direction.
You know, and I think everything's moving in the right direction, right? But you look at the absolute level of prices, and they're still too high in the U.S. The rate of inflation is still too high. So these are very encouraging signs. And I think it suggests that inflation is going to be coming down faster than the Fed expects.
Right.
But that's not something that's going to affect how they feel about the near term here in terms of what they still need to do.
All right, that is an important opinion coming in on the inflation outlook. But reacting to the cooler than expected inflation trend that we did get, Wall Street ended the day higher. So the Dow was up almost 90 points. The S&P 500 saw a gain of around 32 points, and the Nasdaq Composite was the outperformer. It surged over 1% at the close. In fact, the S&P 500 and the Nasdaq actually closed at the highest levels that we've seen since April of last year. That's April of 2022. So those are, the indices on Wall Street. But some more important news that came through. Tesla owner Elon Musk also announced the debut of a new artificial intelligence company called XAI, a direct rival to ChatGPT. So Musk and his team will actually share more about this in a live Twitter space chat on Friday. So this is just the initial information that we do have. But with that, we're going to get into a short break. When we come back, we're going to talk about how all of these important overnight, global cues that we discussed really impact our own markets, and some of the domestic cues that you should watch as well. Hey guys, welcome back. You're still tuned into Power Breakfast. We were just going through all of the global market cues, but let's now talk about everything you should track before our own market open. We have our research team to prep us up for this trading session. Vivek, Nigel and Surbhi are all with me. Guys, a very good morning to all of you. And Vivek, let me come to you first. We were just going through the CPI print in the US, which definitely spells good news for global markets, and looks like our own market will also have a positive start.
Well, absolutely right. The kind of positive news flow that we received overnight has kept, global market worldwide actually quite strong. US has given a very strong handover. Even Europe has given a very strong handover. Crude oil prices continue to remain the joker in the pack, given the fact that we're actually seeing, Brent crude prices above $80 a barrel mark for the first time since May. So that'll be one important trigger to keep an eye out for. But coming to our own markets, yesterday in the last hour of trade, the Indian markets actually saw a significant pullback. And the last hour, of course, was impacted by the index rebalancing flows. You did see significant changes in terms of flows coming in the various indices, both the Nifty Bank, as well as a limited amount of changes as far as the sensex and the Nifty Next 50 was concerned. On the back of that, you did see a significant sell-off in the last hour of trade, also impacted by the HDFC Bank merger pre-flows that did come in. Now, when you're talking about the Nifty IT index, in yesterday's trading session, it was a bit of an underperformer. Today, all eyes will continue to remain on the Nifty IT index, given the fact that, TCS as well as HCL Tech have, given a slightly muted set of results as far as Q1 is concerned. So technology has started off on a muted note as far as the Q1 results season is concerned. Our markets will also react to, strong IP data and also, core sticky inflation data as well. And lastly, keep an eye out for some of the names like Wipro, Federal Bank. They'll be coming out with their results today. Interesting to see, how banks start off, especially with Federal Bank and the kind of names that they would be posting.
All right, Vivek, thanks a lot for taking us through all of those cues. Let's also talk about the individual names that you should watch in today's trading session. Surbhi is here with the list, and Surbhi, it could be a lot about tech today.
That's right. So let's start with TCS first. Now, it was a pretty much inline set of numbers. The constant currency revenue was flat sequentially and up 7% on a year-on-year basis. The margins came in at 23.2%. HCL Tech, it was a miss on a revenue and a margin front, but the FY24 guidance was maintained. The revenue was down 1.2% sequentially. The margins came in at 17% versus 18.2% in the previous quarter. And the company has also acquired a German company for an enterprise value of 250 million euros. Anand Rathi Wealth also came up with the Q1 results. The revenue was up 21% sequentially and the margins have come in at 40%. Patanjali Foods will also be on my radar. The company launches an OFS to sell up to 7% equity. The floor price is set at 1,000 rupees per share. SpiceJet, the promoter Ajay Seng is going to infuse 500 crores into the company. Dr. Reddy's, the company's proposed biosimilar application, is accepted for review by US FDA. And lastly, Lupin is also on my radar. US FDA issues a Form 483 with 2 observations for company's Nagpur solid oral dosage facility.
All right, that is a lot of stocks. Surabhi, thanks a lot for getting us that entire list. Finally, I'm going to hand it over to Nigel, who's looking at all of the cues from the futures and options space. Hi, Nigel.
Well, morning, Pavitra. Before we get to the cues, just wanted to update our viewers that the NSE, they have put up a couple of notices last night, and it's going to be plenty of action from the derivatives market. So the Nifty Bank that currently has the weekly expiry on Thursday, well, that's going to be shifted to Wednesday. That's from September onwards. And you'll say, hey, we already have one expiry out there. That's the Nifty Midcap Index. Well, that's going to be shifted to Monday. So, because of these changes now, every day you'll have an expiry. The first 4 days of the week will be on the NSE, that's on the Nifty related indices. I think we should get that up for you. Monday, Tuesday, Wednesday, Thursday, we'll have the weekly expiry out there. While on Friday, you'll be having the BSC, that's the sensex that will play out expiry. So from September onwards, those are the changes. Getting to the market action then. Well, in the F&O market on index futures, there were some long positions that were had, a few more longs than shorts. On the index option side, well, more calls were bought in comparison to the puts, close to around the ratio of 2:1. But on the writing side, well, more calls continue to get written in comparison to puts, and that was in the ratio of 3:1. And it appears 2 strikes are very active, 19,450 call, that's on the Nifty. And on the Nifty Bank, the 45,000 call, well, that was fairly active, which added close to around 10 lakh shares odd. The sense you're getting is maybe the bears are getting a little bit confident that 19,500 odd level will hold out. And that's because in the last 5 sessions, 4 times we have gone to that level of 19,500, but we've not been able to sustain at those levels. At some point of time, I think the graphic plate will reflect that as well. The way we've been going to 19,500 and coming off the top. In terms of levels that we're looking at, well, since we've been going to those levels of 19,500, 19,550 and seeing a bit of a U-turn, the recent high becomes a bit of a resistance. And on the downside, there is a big amount of open interest built up at around the 19,300 put. So that's why that's the level you're looking at in terms of support. On the downside, the Nifty Bank, it's coming closer to a very crucial support, which is the 20 DMA. So keep an eye out on that. The GIFT Nifty should come up for you on the screen. IT stocks as well will be in focus. But I think going by all the cues that you have, don't look to buy the gap up if it's 100 points. But if it's a little bit of a muted start, well, then you look to get into the Nifty. But it's a good day to go long.
All right, Nigel, thanks a lot for taking us through all of those cues. With that, we do need to take a break on the show. But when we return, like we told you, IT majors TCS and HCL Tech reported their first quarter earnings last evening. So we're going to bring you the fine print in just a bit. Welcome back. You're still tuned into Power Breakfast, and the macro data that came through from India is that retail inflation accelerated to 4.8%. This is for the month of June, led by a surge in food prices. However, it did remain within the RBI's tolerance band. Meanwhile, if you look at the industrial output, that grew 5.2%. This is for the month of May. So we now have Lata with us to take us through all of the details. Lata, how do the numbers look?
Yes, the inflation number has been a bit of a scare at 4.8% compared to Apollo 4.6. Largely food-driven. Food inflation has come in at 4.5%. Our poll had expected 4 after economists had bumped up their number, looking at the tomato and other veggie prices. But that number is a bit serious. If you look at the month-on-month jump, vegetables are up 12%. Cereals are up only 0.5%. But meat is up 3.8%, eggs 5.5%. And pulses up 3.4%. So clearly, if vegetables are expensive, people have used more pulses and pulses prices have gone up. Food inflation is definitely a bother. But the positive in the inflation number is that core inflation is up just 5.1 or 5.15, depending on how you calculate. It's not as high as economists were fearing. Core inflation is the sticky one, and if that has not gone up much, and it's only food inflation, that's something we can live with. One hopes that if the monsoon evens out, this food inflation can perhaps be brought under control in a month or two. So yes, an ugly number, but not as ugly as it could have been if core inflation also had gone up. The silver lining is that US inflation has come in at 3% for June compared to 3.1%, and that might make the bond market not react too badly to the Indian inflation number. Just a word on the growth number. IIP number coming in at 5.2 is a good positive because the expectations were sub 5. And importantly, manufacturing has come at 5.7. Very good. And within that, components, infrastructure up 14%, capital goods up over 8%, and consumer non-durables also up about 8%. Means both investment and consumption somewhat picking up. Overall, good growth always means a little bit more in terms of inflation, but this is not scary. I would say it's a good picture.
All right, Lata, thanks a lot for taking us through all of the numbers. Moving on, in a bid to contain a trade deficit, the government has also curbed imports of certain gold jewelry and articles. So importers will now need to seek permission or license for such imports. Note, however, that these restrictions will not apply to the free trade agreement that India has already signed with the UK and the UAE. So that's some important news coming in as well. But with that, let's move on and talk about the big tech numbers that came through last evening. TCS posted its slowest growth that we've seen in a quarter over the last decade. But of course, this is pretty much in line with what was expected as well. So Rima is here to take us through the fine print. Rima.
You know, for TCS, I would classify this as predictably slow. It's been a subdued quarter. The street was anticipating that, and it's been that. But it's not much worse than what the street was anticipating. So constant currency revenue growth is 0. That's flat on a quarter-on-quarter basis, up 7% on a year-on-year basis. This would be the slowest June quarter revenue growth that we've seen in over a decade, ex of COVID. And even on a year-on-year basis, revenue growth is down to single digits after 9 quarters of a double-digit growth. Margins have come in at 23.2%, down 130 basis points on a quarter-on-quarter basis, impacted by wage hikes. Deal wins have been strong for the company. Deal wins at $10.2 billion, so above the 10 billion mark of total contract value for the second consecutive quarter, and this is despite the BSNL deal not being accounted for. There is weakness in BFSI, there is weakness in the communication, that's the telecom vertical. High tech is still a bit subdued. In geographies, North America, there is some caution in amongst the North American clients as well. The UK continues to remain steady. I think the key from the management press conference is that as of now, they're unable to pinpoint any sort of a recovery, when the sentiment amongst the corporates is going to turn. So they're still sounding pretty cautious, and uncertain about the demand environment.
Pretty cautious on the demand environment. Rima, thanks a lot for taking us through all of the highlights of TCS's numbers as well as what the management had to say. In fact, we also spoke to TCS's COO, N. Ganpati Subramaniam, to get his response on the quarter that went by. Listen in to what he had to tell CNBC.
We are happy with our performance for the quarter, where we grew the revenue by about 7% on constant currency terms year on year. And amidst a recessionary and a macroeconomic challenging environment. We had an order book of $10.2 billion this quarter, which comes after about $10 billion in the previous quarter. So overall, the order book looks good. The demand looks good. But if I can characterize what we see in the market and with our clients, they're all investing in some new technology and doing some heavy lifting in terms of moving things to the cloud, artificial intelligence, and so on, so on.
All right. In fact, we will also be joined by the TCS CFO and CHRO at 8:10 a.m., followed by the interaction with the CEO and COO at 8:35 a.m. Remember, this is the new CEO's first post-earnings interaction with us. So stay tuned for that. And you can catch all of the details at 8:35. But with that, let's also talk about the other big tech company which posted results. HCL Tech reported a big miss on the revenue front as well as on the margin. This is for the first quarter as constant currency revenue growth slipped against expectations of growth. The company, however, has maintained its growth guidance for FY24. Rima, tell us more about this. Definitely a disappointment coming through.
HCL Tech has reported a big miss compared to what the street was anticipating. Revenues have declined for the second consecutive quarter. Constant currency revenues are down 1.3%, a very sharp margin contraction. This is not something that the street was anticipating. Margins are down to 16.9%, a good 100 basis points lower than consensus expectations and below the company's guided band of 18 to 19%. Deal wins have fallen 25% on a year-on-year basis. They were tracking anywhere between $2.2 billion over the last couple of quarters. It's down to $1.56 billion. Sharp drop in hiring numbers to the overall headcount declining by 2,500. The good part is the FY24 guidance has been maintained on both revenues and margins. But so it's a very weak set of numbers, but in a way the street was sensing it because in the last 5 trading sessions, the stock price of HCL Tech went down from levels of 1,200 down to 1,100. So a weak set of numbers is something that the street was anticipating, and boy, it's been a weak quarter.
We believe we have enough momentum in terms of pipeline and the verticals which have done well. So we have maintained the guidance. So you cannot comment on what is the future. I mean, every quarter we will review it and provide you an update. At this point, given all the data that we have, while this quarter the booking has been soft, we believe we will more than make up for this shortfall in the coming quarter. So we feel quite confident of that.
All right, that was just a snippet. We will also be joined by the management of HCL Tech at 9 a.m. today. So remember to stay tuned for that conversation. And with that, we are going to wind down on this edition of Power Breakfast with the news that the Asian markets are well in the green. The GIFT Nifty indicating a 100-point bump up at the start of the trading session. Thanks for tuning in. Bazaar comes up after this short break.